Welcome back to the deep dive. Today we're tackling a name everyone thinks they know, but whose complexity is really fascinating when you get into it. American Express.
It's one of those brands that's just part of the landscape.
Exactly. And if your picture of Amex is, just the platinum or the gold card, you're missing this incredible financial architecture humming away underneath.
That's right.
So our mission today is pretty clear. We're going to unpack how they turn spending into, well, a status symbol, how they use their own data for this massive competitive edge.
And it all rests on this foundation of trust that goes back way, way further than you'd think. We're talking more than a century before modern finance really took shape.
It's a key distinction to start with, isn't it? The whole structure.
It's the essential point, really. You look at the big payment players, and Amex is just different. They didn't grow up as some neutral network for banks, which is, the model for Visa and MasterCard.
Right.
No, they built something else entirely. A model where they control the customer, they control the merchant, and crucially, they control all the data flowing between them.
And that one structural choice dictates everything.
Everything. Their profit, their scale, their whole brand in the world economy.
Okay, so let's dig into that history because it's genuinely not what I expected. We have to go back to, the mid-19th century?
1850, to be exact. Yeah. And they weren't a finance company. American Express started as an express delivery company.
Like moving physical boxes.
Physical boxes, money, important papers, valuables. They were moving actual assets across a country that was, still expanding.
And I imagine that was pretty risky back then.
Hugely risky.
Right.
You got this new railway system, but you've also got railway theft, fraud, robberies. Moving capital was dangerous.
So their business from day one wasn't just logistics.
No, not at all. It was entirely about security, verification, and the trusted movement of money. That obsession with security, it's in the company's DNA.
And that DNA allowed them to go global pretty quickly.
It did. Think about the traveler's check. In the early 20th century, that was revolutionary.
Because you didn't have to carry huge wads of cash across borders.
Exactly. A diplomat going to Europe, an executive setting up a new factory. They could carry something that was safe, globally accepted, and replaceable if they lost it.
So that immediately tied the Amex brand to a very specific kind of person.
A very specific, high net worth, globally mobile person. Diplomats, executives, world travelers, they built this incredible international prestige decades before anyone even swiped a credit card.
That's the origin story of the whole status thing.
That's it. They started with logistics, mastered trust, and then they were perfectly positioned to turn that trust into a status signal when payments became the game.
Okay, so that brings us to the 1950s. The card business is starting up, and as you said, most competitors go for that open network model.
Utility model,
Yeah,
linking all the banks together.
But Amex goes a different way. They build this thing called a closed-loop system. For anyone listening, what does that actually mean?
It's a great question because it's the core of their whole strategy. So in a closed loop, Amex basically controls the entire value chain.
Okay.
So 4 key things. 1, Amex issues its own cards directly to you. 2, Amex signs up the merchants directly. 3, they process their own transactions so that the data never leaves their system. And 4, and this is critical,
They carry the risk.
they carry the credit risk themselves. If you think of Visa as like a public highway system for money, Amex built a private high-speed rail network. They own the tracks, the train, and they sell you the ticket.
That sounds incredibly expensive and risky. I mean, carrying all that credit risk if there's a big recession.
It could be catastrophic, yes, but the payoff was worth it.
And that payoff was data.
The payoff was total, unparalleled visibility. Because they're on both sides of every single transaction, they see everything.
What the customer bought and who they bought it from.
Exactly. That correlation is absolute gold. It created one of the richest, most detailed consumer spending databases in history, long before anyone else.
So it's not just processing a payment, it's understanding the behavior behind it.
Yes. They didn't just see a transaction number. They knew who traveled a lot, who dined at high-end restaurants, who was loyal to what brand.
They were doing behavioral finance at a planetary scale.
Long, long before we even had a term like big data. They had insight. Their competitors, with their fragmented data from thousands of banks, just couldn't get close to.
Wow.
And that loop is what makes their premium brand work. When you get an Amex, you're not just getting a payment tool, you're kind of joining a club.
A club with high annual fees and very selective membership.
Right. And the benefits are layered in, all that stuff.
The travel insurance, the airport lounges, concierge services, purchase protection, all of it.
It's not just a list of perks. It's the cost of maintaining that status signal.
So this is where the psychology really kicks in.
Absolutely. Carrying that card becomes more than just a way to pay. It's a signal of trustworthiness, financial stability, even social status. They manage to turn spending into a piece of your identity.
And that identity piece feeds right back into the data muscle, right?
Directly. Because they own the full loop, they could build one of the world's best fraud detection and risk management systems.
They can spot patterns faster.
Much faster. An open network has to wait for different banks to flag things. Amex sees the whole board in real time. Their models can approve or flag a transaction with incredible precision. It just reinforces that original promise of trust and security.
Which helps explain their revenue model because it's different. They're not just making money on volume.
Not at all. They get it from two main places. The first one is obvious.
The consumer, through those high annual fees. That's the price of admission.
Right. And the second source is the merchant. They charge merchants higher acceptance fees.
Often a lot higher than Visa or MasterCard.
Right. Which begs the question, why would a merchant pay more?
Yeah, you'd think they'd want to cut costs wherever they can.
They do. But what they're paying for isn't just payment processing. They're paying for access to a certain kind of customer.
A customer who spends more.
Spends more, is more loyal, and has a higher purchase density. Amex cardholders are just more valuable transaction for transaction. And then Amex takes that extra revenue.
And plows it right back into rewards and benefits.
Exactly. It creates this powerful self-reinforcing loop. Trust gets you revenue, revenue funds the benefits, and the benefits create even more loyalty.
Which in turn justifies the higher merchant fees. It's a brilliant cycle.
It's a very powerful financial engine.
So let's pivot to the modern day because Amex is way more than a travel card now. It's this massive global platform, right?
Yeah, operating in over 170 countries, pulling in tens of billions in revenue. It's diversified way beyond just the consumer.
How so?
Well, you've got them serving consumers, small businesses, huge corporations, even governments. They're in small business lending, corporate expense management, global payments. It's a huge ecosystem.
And underneath it all, they've become this quiet giant in artificial intelligence.
One of the most sophisticated AI firms in finance, easily. I mean, when people talk about FinTech disruption, they forget that Amex has been using AI to optimize its closed loop for years.
Turning all that behavioral data into action.
Instant financial action. Their recommendation engines don't just guess what you might want. They personalize offers based on your real-time spending. Their loyalty systems aren't static.
They're dynamic. They adjust based on behavior.
Constantly optimizing to keep you engaged in spending. Every little data point is used to make that bond with the customer stronger.
And what about the non-consumer side? You mentioned businesses and corporations.
Yeah, and that's where you see the true monetization of their data. Two areas really stand out.
Okay.
First is the merchant intelligence platform. This is where Amex stops being just a payment processor and starts being a strategic consultant.
They're selling insights back to the businesses.
Deep insights,
Mhm.
customer buying patterns, where people are traveling from, seasonality, fraud trends, all of it.
So give me a practical example. How would a retailer use that?
Okay, so imagine a luxury clothing store in New York. Amex can tell them, hey, your biggest spenders all fly to Miami in February.
So the store can run a targeted marketing campaign in Miami.
Or even open a pop-up shop there. They're selling intelligence that shapes inventory, pricing, even where you open your next store. The merchant fee is no longer just a cost of doing business.
It's the cost of market intelligence.
Precisely. And the second piece is corporate finance. Their global corporate cards and expense systems are. They're not just for employees to buy lunch.
It's about control.
It's a full financial control platform for multinational companies. Real-time control over employee spending, automated tax reporting, cross-border reconciliation. It's a system for managing a global workforce.
Which explains why when they go into emerging markets, they're not trying to sign up everyone.
Not at all. They're surgical. They focus on corporate clients and high-net-worth individuals first. They want to be the executive layer of that country's financial system, protect the brand.
So with all this, how did they avoid getting disrupted by, digital wallets, buy now, pay later, all the new fintech?
They adapted. They didn't fight it. They embedded themselves within it. They integrated with all the major digital wallets.
So you can use your Amex through Apple Pay or Google Pay?
Right. They've experimented with blockchain for corporate settlements. They've partnered with buy now, pay later firms. They made sure their closed loop was still at the center, no matter what the front-end tech looked like.
So bringing this all together, we started by saying they're not just a card company. And the contrast seems to be that while everyone else was chasing volume,
Maximum user volume, yeah. The mantra of almost every startup.
Amex was building this vertically integrated system based on identity, loyalty, and control.
And that's the ultimate takeaway. Amex proves you don't need maximum volume to succeed in fintech. You need maximum value density.
Meaning,
Their power isn't from moving the most money. It's from understanding the people who move the most valuable money with a clarity nobody else has.
they turned payments into psychology.
And loyalty into an economic weapon. They literally made financial identity into an asset class. That closed loop is a moat around their best customers. That's just. It's structurally almost impossible for a volume-based competitor to cross.
So in a world where finance is getting more invisible, more frictionless, Amex shows that trust, identity, and that deep behavioral insight are actually more powerful than just speed.
They're a fascinating counterpoint to the idea that the biggest network always wins.
Which leaves us with a final thought for you to chew on.
Yeah. The company that best understands why people move money will always have the deepest advantage. So if psychology and identity were that powerful in finance, what other parts of the digital economy, social media, healthcare, commerce, will ultimately be won not by pure tech speed, but by who has the deepest psychological insight?